Hey everyone, welcome back to Chip Stock Investor. It's Casey and Nick.
Hey, so in our last video on ASML Q2 2025, I said that a new ASML high-NA EUV machine cost 300 to 400,000 euro.
Now, that's the first time that you've said that it's 300 to 400,000 versus the 300 to 400 million that it actually is. And I was thinking it must just be a clearance sale.
And Kasey went shopping. She's ordered one, and Chip Stock Investor is getting into manufacturing.
Yeah, but now that I have been corrected once again, and it's actually 300 to 400 million, I feel like I probably should cancel that order because I have nowhere to put anything that big. One of the biggest reasons.
One of the reasons.
Anyway, cancel that order.
It's not 300 to 400,000. We know that. Sorry for the misspeak. But we are going to continue with that conversation from last week, talking less about the actual equipment and more about one of ASML's biggest, most important customers, Taiwan Semiconductor Manufacturing.
Taiwan Semiconductor Manufacturing, or ticker symbol TSM. It fits into that chip fabs and contract manufacturer right in the center of the semiconductor industry flow.
And we still hold the belief that this is one of the best stocks that you can invest in if you just want broad-based coverage of the entire semiconductor supply chain. The company is highly profitable, and you get lots of built-in exposure to future developments in the industry as well. Like, for example, liquid cooling. Check out Semiconductor Insider at chipstockinvestor.com. That's our membership where you can find all of our research and weekly live events. We will be talking about some new R&D work that TSMC is doing to cash in at some point in the future on this whole data center liquid cooling craziness that is going on. So check that out. We'll have that update out later this week. See you over on Semi Insider.
You might recognize this chart that we shared with you during our ASML presentation, showing the system sales breakdown for ASML over the last 2 quarters. We'll focus in on this most recent quarter in Q2 2025. And that far right pie chart, sales of lithography units and the region that they're getting shipped to. Taiwan makes up 35% of that in Q2 2025. And TSM is not just in Taiwan anymore. They also have fabs in production and being built in the United States. And then they also have a partnership in Japan as well. So a big portion of sales from ASML going to none other than TSMC. Before we continue with our discussion, I want to give a quick shout out to the sponsor of today's video, Fiscal.ai.
Fiscal is a great research platform for getting deep dives and deep understanding of businesses before you make a decision on where you want to invest. This chart we put together with Fiscal.ai showing TSMC's quarterly revenue and the growth rate in the blue bar. Fiscal.ai has lots of historical data like this, so you can chart back 20 years and see the cycles for companies like TSMC as they kind of ebb and flow with the demand and with the technology upgrade cycles inherent in the semiconductor industry. But we just captured this part of the cycle here, the last cyclical decline a couple of years ago, and the subsequent growth since then, driven in large part by, of course, Nvidia and its Hopper and now Blackwell systems.
You can make your own cool charts like this one with a 15% off discount with any paid plan with the link in our description below or here on the screen, fiscal.ai/CSI.
Now, important little tidbit from this chart here. Of course, TSMC, $32 billion in revenue in the last quarter, highly profitable, which we'll show you here in subsequent slides. They have the money to spend on these big, expensive EUV lithography machines from ASML. But a big chunk of ASML's revenue last quarter was, of course, upgrades to the low NA EUV machines. Those are the previous gen EUV machines. TSMC has actually decided to make do with those, but wanted an upgrade to increase the throughput of their wafers being produced by ASML's equipment. That's one way TSMC can control these expenses to upgrade their fabs and maintain very high profitability. ASML, of course, would like to see them upgrade to the new 5200B high NA machine, but that is the realm of just Intel at this point, as Intel looks for a way to narrow the technology gap with TSMC. But let's delve into the specific TSMC numbers here for just a moment.
The biggest portion of the pie, high-performance computing, is at 60% in this most recent quarter. High-performance computing is data centers, enterprise compute, including AI. HPC increased 14% quarter over quarter, but TSMC also had a healthy increase to pretty much all of their other end markets as well. Smartphone increased 7% year over year. IoT, or Internet of Things, increased 14%. Automotive was the outlier, stayed flat, but digital consumer electronics increased 30% and accounted for 1% of their total revenue by platform.
So that's great news. The last couple of years, of course, all things accelerated computing and AI is what has been keeping the semiconductor industry afloat, but it looks like the growth cycle is returning for the rest of the industry. So that's great to see that happening for TSMC. But let's look at this next slide, though, because far and away the main driver of growth right now is still accelerated computing. And a lot of that manufacturing of accelerated computing is happening on the 5 nanometer or N5 manufacturing node, and the newest one that is still ramping up at a healthy rate on a year-over-year basis, the 3 nanometer or N3. So TSMC tends to start with the smartphone with their latest and greatest manufacturing processes, but slowly roll that out to high-performance compute over time. This growth cycle, a little bit different though, because it's not just simply the N5 and N3 denominations indicating the comparative performance of the transistors and densities and logic chips. It's also being driven by advanced packaging. And a lot of the new stuff that Nvidia, Broadcom, AMD, Marvell, and others need to push the data center market forward for the AI era. And how is TSMC managing their profitability as they roll out these new manufacturing processes? I would say it's doing quite well.
A lot of focus has been placed on all of the capital expenditures that TSMC has planned for future growth. They will have plenty of spending in Taiwan as well as in the United States. Capex was about $10 billion in Q2, which was up 44% from last year. But even with that spending, free cash flow is still positive and came up 16% from the year prior to $6.8 billion. We'll link a video we did right here in regards to that capex spending in Arizona in the United States.
And just real quick look at the balance sheet here. So that free cash flow helped fund the higher dividend payment and helped maintain TSMC's very deep pockets. They had $89.5 billion in US dollars in cash and equivalents on balance, debt of about $30 billion. So net cash and equivalents over and above debt, almost $60 billion. This is indeed one of the deepest pocketed companies on the planet. Last bit here, Kasey, let's take a look at the guidance. Slide again from fiscal.ai. You can see in Q3 2024, revenue in US dollars was just shy of $24 billion.
In Q3 2025, revenue is expected to be between $31.8 billion and $33 billion at the high end. That's 6 to 10% sequentially, and between 37 and 38% at the high end of their guidance on a year-over-year basis.
Yeah, that's pretty impressive growth. And bear in mind, this does also include some headwinds from the weakening of the US dollar. So when TSMC makes a sale in the US and then converts that back to Taiwanese dollars for financial reporting purposes, it does hit their growth rate and also hits their profit margins. We have more discussion on that effect over on Semiconductor Insider as well. But overall, this was obviously a fantastic Q2, and the outlook for the back half of 2025 is looking pretty good as well, as those Nvidia Blackwell systems ramp up to much larger production.
We'll be discussing TSMC's foray into liquid cooling infrastructure over on Semiconductor Insider. And we'll be discussing all kinds of stuff over there, especially as earnings season rolls on. Make sure you hit the subscribe button, like the video, and check out our website, chipstockinvestor.com. We'll see you all again soon here at Chip Stock Investor.